on China's roller coaster, stock staging a late-day rally to finish higher on the day. The Dow at one point was down 168 at its low, but it did finish up 69. CNBC's own Mandy Drury joins us now with all the details. Good evening, Mandy.
Hello there, Larry. Well, what a roller coaster session it was. Of course, over here, things started off looking a little bit bleak out there for traders after the reports that Greece may be close to defaulting on its loans. As you mentioned, Larry, the Dow was down about 170 points there for a time. But in the last hour or so, voila, a big relief rally on the Financial Times report. You were talking about this a moment ago, that the head of one of the largest sovereign wealth funds in China visited Italy's finance minister last week, and Italian officials have been making some trips over to Beijing to discuss China throwing the lifeline by buying up billions in Italian debt. Also, U.S. financials had all that to contend with, but they also had to contend with the Bank of America bombshell. Of course, the CEO, Brian Moynihan, had to announce something drastic to show shareholders that he was in charge. You've got the Bank of America shares losing half of their value over the past year, so everyone was demanding them to do something. Well, of course, today he told investors they're planning to save $5 billion per year, shrinking the nation's largest bank, cutting 30,000 jobs over the next few years, about 10% of its workforce, and, of course, shuttering a number of branches. Elsewhere in stocks, lots of other stories about there, Larry. At the beginning of the week, you got chip makers, a real hot ticket today after Broadcom said it's buying semicon maker NetLogic for more than $3.5 billion. Now, this is actually Broadcom's biggest ever acquisition. It's a really healthy 57% premium over the closing price on Friday. So as you can imagine, NetLogic shareholders real happy. Those shares shooting up today about 51% here on the board, closing there at 48.12. Broadcom, however, we saw a moment ago, those shares down about 1%. And last but not least, publisher McGraw-Hill surging today by about 4% on words it's going to be splitting into two public companies by the end of 2012. So lots to sink our teeth into the beginning of the week, Larry. Back over to you.
All right, Amanda Drury, thank you. As always, now we've got Lee Munson, Chief Investment Officer at Portfolio, and Jeff Kleintop, Chief Market Strategist at LPL. Jeff Kleintop, all right, take a whack at the China news, because I am very suspicious, even if China buys a couple of Italian bonds, it isn't going to change the dreadful European and Greek situation. But you tell me, how does this fold in to your whole investment outlook?
Well, China has a vested interest in a viable European bond market as an alternative to treasuries. So certainly I think they want to provide some support there. And then they realize that a European recession's, well, not good for Chinese exports and certainly not good for any protectionism that may arise in the EU. And so they may be looking to buy with a big check access to those markets. But the reality is Greece is probably going to default. Italy is probably not. And I think the question is, the banks in Germany and France, are they ready for a default in Germany? Looking at the numbers from the Bank for International Settlements, their exposure to German and French banks' exposure to Greece, very low, about less than 2% of cross-border assets. I think they're ready or about to be ready for that default. Default could actually be a positive catalyst for this market and get it out of the way.
You think so? You think default will be a positive catalyst? And I want to ask you, Lee, before we get to your portfolio strategy, in your thinking, what is the chance of a real Le Tarp grand design, the ECB, the European Union, the IMF, just throwing $1 trillion or $2 trillion worth at the European sovereign countries in trouble like Greece and at the banks? What's the chance of that? A blanket Le Tarp?
I think that the German finance minister has made it very clear that they're unworkable. I don't think those countries versus America can actually get together and do something of that magnitude. Just 48 hours ago, you had the German finance minister saying we're not going to have a default, and to speculate, he made a comment about the sky folly and killing cats, and now all of a sudden we have the news today that all of a sudden we're going to have an orderly default, whatever that means. I wouldn't count on it, and also I don't think China has enough money to write a check that'll solve the problems in the ECB.
You can't buy the market now, can you? Or can you? Would you dare buy the market right now? Would you be a contrarian?
Not today. I used to be. All this year, I've told you, buy on these dips that we still have, lowering commodity prices. When has oil dropped another 10, 15, 20% in the last month or two? It hasn't. Okay, maybe Brent's been fluctuating, but when you really look at commodity prices, it's not going down enough for me to see the earnings change. And that's a big change in my tune from a few months ago. I think you have to have some cash. I think you have to be defensive. I think this could be a problem until we get out of October. Maybe we get a Santa Claus rally. I want one, but not in the next 4 weeks.
Jeff Kleintop, I'd love a Santa Claus rally. I'd probably love any kind of rally. But again, being realistic, I just don't see what's going to drive it. And Jeff, Let's stay with China for a minute, okay? Michael Darda put out a great research note today saying China could be the next shoe to fall. Their credit spreads are widening. Their sovereign bond spreads are widening. Their money supply has virtually collapsed. What if China turns out to be a whole lot weaker in its economy? And what if that triggers a global commodity deflation? Commodity prices, including oil, falling big time left and right. What are the chances of that, Jeff Kleintop?
I don't think the chances are very high, but you're right. It's a big risk. And so even if it's a low probability, it's something we have to factor into our analysis. We're watching the Chinese data like a hawk, every single data point that comes out. And we think that they seem to have nailed the inflation problem. That means they're probably going to get a little bit more dovish on policy and help to lift growth in the quarters ahead and not further tamp it down. So we're optimistic China's going to hang in there and continue to drive commodity demand.
With a queasy profits outlook, and I mean queasy here in the USA, where's the S&P going to be by year end, more or less, Jeff Kleintop?
You know, we still are holding to our target of a 5% gain on the year, roughly mid-single digit gain on the year. So that's about 1,300 to 1,350 and a good move from here.
Wow, it's a heck of a move from 11.6. Do you agree with that, Lee Munson? By the end of the year, you get back to 1,300, 1,350? Oh, my gosh.
No, I mean, come on. China, listen, China doesn't have a handle on their inflation. I understand it's ticked down a bit, but I'm with you. China does not have a grip on inflation. If they just have a little bit of a problem, Europe is toast.
So what about the S&P? What about the S&P? Jeff Kleintop gave us an optimistic to year-end forecast. What's your take on that?
I'd rather bet with him, but I don't think it's going to happen. I think if we can get back to 1,300, it'd be an act of God, act of Congress. I'll take it. I doubt it.
Gold off $40 today. You gold buyer?
No way. I think
dollar's going up. The euro's going down.
Listen,
the dollar's going up.
If there's peace in Europe, gold's dead.
You expect peace in Europe? Financial peace? Debt peace? Are you looking for that? Or are you Neville Chamberlain on this story? Peace in our time, but it's phony as a $3 bill.
If something like that were to happen, gold would drop so much, it's not worth the risk to the average investor out there watching the show. Find something else to buy, maybe the S&P, cheaper, at 1,000.
There's no peace in this market, that's for sure. I mean, today we just saw these huge swings, right? 200-plus moves, 200-point-plus moves. I think that's a sign that we're moving through a bottoming process here. We've seen 1120 now 4 times, 4 different closes on the S&P 500. We may get there again. We would be buyers there. We still have some defensive assets, some dry powder to put to work. We'd be looking to do that there. An emotional market, one that moves up and down like this, part of a bottoming process. Markets are quiet at the top, noisy at the bottom. I think we're near it.
All right, well put, gentlemen. Thank you for your realism. I appreciate it. Lee Munson and Jeff Kleintop, we appreciate it.